Hi, welcome to This Week in Property. I'm Jayashree Kurup, I'm editor NBTV, and I have with me Prabhakar Sinha, who's the real estate editor of the Times of India. The RBI cuts its repo rate from 6.25% to 6%. This is likely to trigger a drop in home loan interest rates. Now, let's understand what the repo rate cut means and how it affects you as a real estate consumer. Prabhakar.
Yeah. Basically, banks are taking deposits from the public. That is the main source of funds for the banks. But the banking sector, to run it efficiently, number one, and very securely, it is mandated that bank has to deposit certain amount of money in government security. They'll have to buy government security. And this is not a small amount. Earlier it used to be 25%. Now, step by step, it has been reduced 20 to 22%, 24 to 22%. But of total deposits, they put something around 20 or 21, 22% in the government security. Besides that, they also mentioned CRR and other things in the government security. So a large chunk of these deposits goes into the government bonds. Besides that, they invest in the corporate bonds, corporate securities, and the corporate loan. Now what happens that RBI normally controls the interest rate in the market through various kind of an instrument. Now while bank giving loan to the corporates, many a times they find themselves short of funds. In that circumstances, they go to borrow from RBI. And RBI give them both short-term loan also and long-term fund also. Now, short-term fund normally they give at that is called repo rate. I mean, in which what banks do, that banks have this government bond, surplus government bond, means government bonds more than the mandated under SLR, statutory liquidity ratio, and the CRR, cash reserve ratio. If cash reserve ratio, basically they put in cash, but SLR. So the banks gives that bonds to the RBI, and against that bonds, RBI gives them the loan. Now that loan normally is given for the overnight period, or if there is suppose on Sunday comes the next day, then for the 2 days basically. Now for that rate is called call money rate also in the market, where banks borrow from the market for overnight funds, and that fund is required. Suppose they have to meet certain commitments and they are short of funds on that very day, then they go and borrow it. But these rates are very important. Basically, they calibrate the interest rate in the market. So, repo rate, through which RBI controls the short-term rates, with that, they basically first of all, they give indication to the banks what to do. Now, suppose if the repo rate is increased, that means RBI is giving indication to the bank that interest rate should be increased. Now, if repo rate is lower, that means bank should lower the rate. Similarly, it's just opposite is called reverse repo. Now, in the reverse repo, what happens that if banks have surplus cash, surplus money, and they don't know what to do, so then in that case, they can put that money with RBI, and RBI do give them certain interest rate also in that case. Now, today, the reverse repo is 0.5 percentage point lower than the repo rate. That has also been lowered. So, on repo rate, basically RBI lends to the banks, and the reverse repo, RBI takes the surplus liquidity from the bank. So these two rates basically helps bank in fixing the interest rate in the market. But these are the two rates only through which RBI gives indication also and infuse liquidity, try to infuse liquidity in the system.
So the RBI has reduced the repo rates twice in the last 2 months.
Exactly.
What does that mean to what is the indication it's giving?
First of all, the economy is slowing down. And this is very clear from the various indications. Inflation is controlled, in fact, is further going down. Earlier it was 3.2 to 3.3%, they were thinking. Now they have predicted that it might come down to 2.8 to 2.9%. Now, inflation is controlled. I will not say that it is very low, but all these indication is basically hints at slowing down, not the slowing down of the economy, but kind of a economy going into a bit underperformance. Now, for that to kickstart further or to fire it from all the cylinders, the interest rate cut is basically to give indication to the banks, basically which gives fund into the economy, that economy can grow at faster than the present rate. And so the loan and other things should be given in the system so that the economy can grow further, or otherwise, what will happen that over a period of time, if this continues, then economy can slow down to right now 7.2%. They have brought it down from 7.4 to 7.3%, and it can go down further. So that is why the interest rate cut by RBI twice in last 2 months itself is a clear indication to the banks that interest rate must soften. It should come down. So this is a very good indication, and that is why many of the banks in a couple of days will start announcing it that interest rate is coming down.
ICICI has already announced that it has brought down its interest rate. There is, Naresh Singh of Delhi asked a very pertinent question. How does the change in repo rate bring changes in EMIs?
Yeah. Number one, that I told you that if the lowering of the repo rate is a clear indication to the banks to lower the interest rate. Now, if interest rate goes down, your EMI will also come down. Like for 1 lakh rupees, if the suppose interest rate is 10%, and your EMI will be somewhere around 980 rupees or 975 rupees. If it goes down by half a percentage point, then your EMI will also come down by around 20 rupees per month per lakh. So if the interest rate goes down, your EMI will go down. So this is a hint by the RBI. Now, whether bank will be able to do that or not, that also depends on other factors. The other factor is the liquidity in the system. And if the bank doesn't have a cash in its hand, it simply cannot lend. Now, today in the market, what has happened that for last 1 year at least, the economy has started growing. Before that, if you remember, that private sector was not investing at all in the system. So the corporate loan was not happening much. So credit offtake from bank by the corporates were very, very low. That was around it was going at 4 to 5% per annum kind of a thing. But this year, it has gone at around 14.5% so far.
So that shows that the corporate India has been active and performing.
Yeah, they want to, they want to take loan to do more and more economic activity.
Right.
Now, to drive it even faster, you'll have to basically lower the road, because in India, still corporate loan is somewhere around, remember, 11% to 12%. Inflation is 2%. So real interest rate is around 10%, which is huge. World over, the real interest rate is in the range of 1 to 2%. Only thing is this, that our inflation expectation is still not very low. So today the inflation is at 2.5 to 3% or 4%. So if this suppose continues for a long time, then interest rate can also fall to around 5% or 6% or around 7%. But normal expectation is that inflation will again go back to 4% or 5%. That is why the interest rate remains around 8%. But interest rate should come down to around 8% if inflation remains at around 3 to 4%.
Okay. Now, Mihir of Noida is saying, when does the new repo rate get implemented and in what time?
It is already implemented. Now, the moment the repo rate announces, from the next day, banks can borrow from the RBI at that rate if it requires funds. Only thing is this, that if it doesn't require funds, it need not borrow from the RBI, but it is an indication that the interest rate should fall. Number one. Number two, now the call money market, where the banks and other financial institution goes to borrow for short-term fund, now interest rate of the call money market will also go down. And the call money market, obviously, control is basically for the short-term fund. But that short-term fund creates the long-term interest rate also. It drives like that. Not all the time, but particularly in today when the liquidity in the system is, banks, RBI is trying to infuse further by lowering the SLR requirements and other things. So, and besides that, through the OMO, like RBI is ready to purchase dollars from the market. If RBI purchase the dollar from the market, that means the rupee will be infused in the market. So the liquidity in the system will increase. So all this mechanism, RBI is trying to create a situation where there should be sufficient liquidity and interest rate, this lowering of the repo rate will be transmitted to the customer level.
Okay. So now let's take our customers who are locked in. These are the home buyers, the potential home buyers. There has been a lot of completions in the market, and with the customer clearly interested in completed projects, there has been end users have been active sourcing loans, buying properties, right?
Yeah.
For people who've already bought properties, they have taken it at whatever rate. As the rates come down, will they get the benefit of the rate?
Yeah, exactly, because most of the home loan rates are taken today at the floating rate. Now, floating rates home loan means that it will be fixed again after a certain period of time. Normally, they say it that they will do fix it once in a year. Now, suppose if you have taken a loan, say last year November or last year September, then this year September they will refix the rate again according to the rate going on at that time. In between, if you think that there is a huge difference, now suppose you have borrowed at 11%, and today if the rate has gone down to say 10.5% or 10% or 9.5%, suppose 9.5%, then there is a difference of 2%.
Yeah.
Now, normally there is no prepayment charges. Okay, so now you can go to any other bank and you tell them that, okay, fine, I want to prepay my loan, and you give me the loan so that I can prepay, but I'll give you only 9.5%. Suppose if you are getting it, then you can go to your bank and say that, boss, I want to shift their loan at 9.5%, otherwise you do it. So if you can bargain like this, the lending bank today itself will lower the rate. Okay, but for that you'll have to be a bit active. Or otherwise, if you leave it, then they will refix it once in a year, and that normally they have 1 year the day you have taken the loan, or that is the date where they fix it. That is the case in the case of SBI, SDFC, ICICI, they do it like that. But if you are active, if you're watching the market, you can go to the bank and ask them that you should lower the rate as the market rate has come down.
So you as consumers have the responsibility to bring down your own EMIs. You can to your bank when you've read that the repo rates have come down and the banks are dropping the interest rates. Go back to your banker and say that you want the new rates applicable immediately. Of course, it will be done once a year automatically. But you can go back to the bank and say, if it's dropped now, I want lower rates.
Now 6 months is left. So why would you keep on paying for the 6 months the higher rates? You go today and bargain and you go for the lower rate. You should do that.
So as consumers, as home loan seekers, you have the responsibility to go back to your banks and say, the repo rates are down, the interest rates will come down. I want the benefits immediately. Now, I think there is somebody who has asked, if the bank passes on the benefit now, how much will the EMIs get reduced?
Now, it depends on the amount of the loan particularly. Now, normally if the rate is down by 1 percentage point, then the EMI comes down by around 25 rupees per month per lakh. So now if you have taken 100,000 rupees, so that means 2,500 rupees per month per lakh, and for per annum it will be 30,000 rupees per annum. Your EMI will go down.
There's Deepak who asks, can the money borrowed be used by banks for purposes other than lending to consumers?
What?
The money borrowed, can the money borrowed be used by banks? The banks, you were talking about how the banks they need to shore up their lending, their borrowing. Can they be used by the banks for purposes other than lending to customers?
Yeah. It is. I mean, when the bank is borrowing from the RBI or from anybody, now it is the bank's money. It is the bank's liability, of course, but it is the bank's money. And wherever a bank would like to invest that money, they can do it. Now, suppose when going to a bank to deposit your money, that in other term, in the banking term, banks is borrowing from you, and it's a liability for the bank, and bank can use that money anywhere. It is on the wish of the bank. But only thing is this, that bank has to invest that money in such a fashion that they must earn on that, so that the bank can return money to you.
There's Garima of Delhi who says, if the change repo rate is implemented immediately, then why don't banks pass on these benefits to buyers? That's where you're saying that as buyers, once a year the bank is mandated to reduce the rates or change the rates.
No, first of all, the lowering of the repo rate doesn't automatically go to the lowering of the rates by the banks. Now, banks will now ascertain it, that how this entire thing is going to impact it, what is their cost of fund today. Mandate today, the situation is that in the last 1 year, the total credit given by the bank is more than the deposit it has taken from the customer. So there is a tightening in the liquidity. Now, to address this liquidity problem particularly, bank will have to ensure that it should get more deposits. And for that, deposit rate, suppose it increase, then the cost of fund for the bank will increase. In that situation, the condition for the bank to lowering of the rate will not be that easy. So to address that problem, what RBI does, that they address or they lower the statutory requirements, so that RBI can sell or can raise funds against its own investment in the government security. Now, with that security fund which they are raising, that they will lend at a lower rate. Now, that is why in this facility also, in the yesterday's policy, RBI has also reduced that one term is called facility to avail liquidity for liquidity coverage ratio. Now, their RBI has reduced it by 2 percentage points, and this has to be implemented in a graded manner over the next 1 year. This will lead to huge infusion of fund in the banking system, in the liquidity system. This will address the liquidity problem of the banks, and so that bank will start lending at a lower rates. But for that sake, remember, bank will have to create a situation where it will have a lending capital with it, so that it can lend, or otherwise just lowering of the rate will not help. So they'll have to ensure first the liquidity. For that, increasing the deposit rates will not address the problem. So they'll have to go to the other segments of the government security. There they'll have to either sell it, or they'll have to raise funds through that where the cost of the money is lower, and then they will lend it at the lower rates.
Sure. And you want to explain on your graph?
Yeah, that's what I want to.
Deepak, if we could have the graph, please.
Like in 2019 so far, the last 1 year, RBI has total aggregate deposit of 11,146 billion rupees. But in the last 1 year, RBI has already given credit of 12,069 billion rupees.
It has lent more than it has earned.
It has taken the deposit.
Yeah.
So that means it has liquidity problem today. It don't have that kind of a money which is really needed to give credit further. So to address this problem, either they'll have to raise funds through various other means. First of all, like either they will increase the deposit. Now, deposit increment doesn't mean that if suppose they can do it by increasing the interest rate on deposit. But if they will increase the interest rate, then the cost of funds will increase. And if the cost of funds will increase, then they'll be forced to lend at a higher rate. So then again, that is not going to help with that thing. Now, RBI is lowering the repo rate.
The government wants the economy to do well. The government wants the banks to lend more. The government wants it to keep the rates low. All three, if it has to happen, the government had to allow the banks to raise some deposits so that its mandatory requirements are met.
Basically, that is required. And that they can do, like the investment. Now, I told you that around 21 to 22% of the total deposits which banks raise has to be put in the government security. Now, that requirement, if suppose is lowered, then suppose so far the total deposits with the bank is 1 crore 22 lakh 262 crore. So either 1,22,000 to 62 billion rupees. Now this entire SLR on this would be huge. Now if SLR requirement is reduced a bit, huge sum of the money is released in the system, and bank can use that money to lend. So there the bank will have a fund at a lower rate, and there then they can lower the interest rate also. So these kind of measures RBI suggests and RBI takes so that interest rate is lower and banks can lend at the lower rate. And that is required. That is what RBI is trying to do today. That lowering of the rate, at the same time, credit availability should also be increased. Now, to do these two things, they'll have to pick with the certain policies and other things also.
Right. And Garima, that answers the query that you raised. If the change repo rate is implemented immediately, why don't banks pass on this benefit to the buyers? They will pass on. First, the repo rate is lowered, then the banks compute how much they can lower the interest rates, after which they will pass it on. So you as existing buyers, once the bank announces a lowering of interest rates, you have to go back to your bank and ask them to lower the rates for you. And that is anyway, once a year, the banks mandatorily have to reduce your
review it at least.
Review your rates. If it's gone up, it will raise it. If it gone down, it will lower it, depending on the if you opted for the floating rates. There is Arun Sharma of Mumbai who says, I have an ongoing home loan of 20 lakh. I chose floating rates and I want to know how my EMIs can come down. Despite these repo rate cuts, banks never contact us or lower our EMIs. How does that work?
Now, two things is there. Now, if you have not contacted them, and suppose if you have given them the check of certain amount, then that amount will go against your name in the bank. Now, even if suppose a bank has lowered the rate and your EMI has come down, but for that, bank will not contact you. If you will go to the bank, then only bank will say that either you give me the fresh check of that amount so that your EMI goes down, or otherwise what happens that, I mean, the old EMI that you are giving will lead to lowering of the tenure of the entire repayment period. Now, suppose you have taken the loan for 20 years. Now, 2 years has already passed, so 18 years are left. Interest rate has suppose gone down. So, and your EMI remained the same. So now your tenure might come down from 18 years to 16 years or 17 years or 15 years for against the surplus amount that you are paying every month. So it doesn't mean that if you have a bank has not approached you, that benefit will not get passed on to you. Benefit will be passed on.
It's in the tenure of your loan that is reduced and not in the monthly EMI.
And if you want that your monthly EMI should come down, then you should contact the bank so that bank will ask you that, okay, now you give them the either fresh check, or if you have given them electronic payment instruction, that electronic payment instruction should be changed and that should be revised.
There's Nitin Rajput who asks, can we demand from the bank to lower their interest rates after the repo rate cut? If so, how? Prabhakar, how do you go to a bank and ask them to cut your interest rate?
Normally, the moment, like after in the next 15 days, most of the bank will announce the cut of the rate. Okay. Now you go and ask the bank, go to the bank account, or you can see it on your website itself, if you have an account, that at what rate banks is charging you the rate, interest rate on your loan.
Yeah.
You contact the bank, you go to the bank account branch. In the branch, you ask them that, boss, you are charging this much, whereas your present rate is this much. If the present rate is lower than that, so you ask the bank that they should reduce the rate to this new rate. Now, if your rate is low, I mean older, if your loan is the older, the bank might say that no, we will do it on the due date of say October or September or August, whenever it is due. Many times bank do so. But if you will request them, then bank will certainly change the rates, or otherwise, immediately, or otherwise you have the option to shift your loan to some other bank.
And I can see that consumers have taken this point very seriously, and we have so many queries coming in live. There's Manish Mathur who says, I have an ongoing home loan from HDFC. Do they change? Does they will change to lower rates automatically, or I have to request them?
You have to request them.
You have to request them because they will change rates automatically once a year.
Once, yeah.
But if, like Prabhakar said, you go to your branch and talk to your bank and say that you want the interest rates lowered immediately because they have been reduced, the bank has to reduce it for you immediately.
They do it also.
That's
The
British.
unfortunate thing is this, that they normally ask that why didn't you request? I don't know why do they stick to this point that the customer should request, then only they will reduce it. I believe this. Earlier what used to happen, that अगर आपने 3 साल तक request नहीं किया तो 3 साल तक कुछ लोग rate 9% आ गया, फिर वो 14% पे देते रहे. लेकिन now they are saying it that okay, we'll do it once in a year, but if you want to get it done immediately as the rate comes down, you must contact them that people's rate should be reduced, and they do reduce it.
And Brajesh Kumar of Delhi says, which scheme should I choose when I borrow a home loan? Home loan are available at both fixed and floating rates. How does repo rate cut impact EMIs?
Now,
3 queries here.
floating rate is always beneficial today. Now, look, it's risky also a bit, but in India, floating rate is always lower than the fixed rate. Okay. So now today, suppose rate is going on around 9.75%. But if you will opt for the fixed rate, they will give you 10.5% or 10.75%, or 11% might be. Because there you are secured that your rate can never go up beyond 11%. In the case of 9.75%, the interest rate can go up also, interest rate can go down also.
But we don't see it rising so significantly to go up to almost 11%.
Exactly. But this is the call you have to take. Now, if you think that interest rate will not firm up further, as the inflation remains benign like this at around 2 to 3 or 4%, then interest rate should fall. But if inflation goes up to 9-10% as it was earlier, then interest rate can go up also. So you should be a bit alert. But in the present scenario, you should go for the floating rate. That is the first
The
one.
floating rates are beneficial because you get the advantage of the
Lowering of the rate
interest.
also.
Yes.
Yeah.
So even if it goes up, it's for a period of time. And suppose you take it, like Prabhakar said, the fixed rates are higher, and if you take it for a higher period of time, then bringing it to a floating rate means that there will be a switching cost.
You'll have switching cost. You'll have to pay 2% of the entire amount, outstanding amount, to go for the floating rates at that time. So in this market, when you are expecting interest rate to go down further, it is better to go for the floating rates. That is the first part. Another thing says that.
1 minute. He says, how does the repo rate cut impact EMIs? We just explained that it does impact EMIs. Either the EMI comes down or the tenure of the loan. The last 2 EMIs maybe you won't have to pay.
Yeah, last few amount, it could be 2 to 3 or 4 years also. In many cases, suppose interest rate goes down by 2 percentage point, then your EMI might get reduced by substantial years, in fact, 3 to 4 years also.
Right. There is Chand Singh of Greater Noida who says, do banks really pass on the lower rate benefit to borrowers? They hardly send any communication to customers regarding lower rate which they can apply. If a customer asks for it, then they will tell you that that too is confusing.
Yeah, basically what happened that earlier, now the interest rate, basically the floating rates, they fix against MCLR rate, okay? Basically that lending rate based on the various cost factors. And they basically attach their floating rates of loan with MCLR rates. So as the MCLR goes down, MCLR is not in their hand basically. It is normally calculated with the various factors which is known, and RBI monitors that. So the MCLR rate suppose goes down, then the floating rate loan rate is automatically goes down. So now the floating rate is suppose 10%, and you have been given 1 percentage point lower than the floating rate. So your interest rate will be 9%. So now your rate should become the 9%. But what happens, and that will automatically become 9%. The moment it goes down to 10%, it will become 9%. but they will affect in your case only once in a year. So suppose in August they are fixing your rate. So in August they will say that okay, from August onwards you will pay only 9% interest rate. But if you go today itself, suppose in May, that sir, your rate has gone down already, so why don't you reduce my rate also? So in that case, they will entertain you and they'll say that okay, you do it. Or otherwise, they may ask you also sometimes that okay, you'll have to pay some 0.5%, 0.5% of the outstanding amount as some fees kind of a thing, which normally they should not charge you. And if they'll charge you, then you can go to the other bank and say that okay, I want to prepay the amount, and you can go for that because there is no prepayment charges today. Right. So for the old loans, now in the first year there are some banks who are charging it, but for old loans there are no prepayment charges.
Manu Gaur of Pune says, what are the home loan basics we need to know? I want to buy a flat in an affordable housing project. How can I choose the best home loan plan scheme?
You have to compare it with the various banks, that who is giving you the best rate.
Currently, all banks don't give the same rate of interest.
Yeah, there is a difference between at least 25 to 50 basis points. Some banks might give you 9.75, some banks might give you 10%, some banks might 10.25%, some might give you at 9.5%. Many a times they will to allure the customers, they'll say that okay, for the first year I'll give you only charge 8%, but second year onwards I will charge you 9.5% to 9.75%. So then you will have to compare it, these various aspects, and then only you can choose that which one is the best.
And today, for instance, the SBI had a special rate of 8% for the first year for new home seekers.
Yeah.
So immediately HDFC, which expected that many of their people will go away, they created a switching charge of 3% so that people don't switch from there. Now, clearly, HDFC wants to hold on to its home loans.
So you insist on them that, okay, you reduce the rate. They normally do that.
Yeah. And because they want to hold on to you, they will give you, they will sweeten the deal for you.
Yeah.
Sir, home loan खत्म करने का तरीका बताएं. होम लोन खत्म नहीं होता है योगेश. अगर आपको घर चाहिए तो आप लोन लेते हैं और लोन लेने से आपको कई फायदे होते हैं. Would you like to explain?
Exactly. Now, this is a misnomer basically. Now that home loan, basically, let me tell you this, that home loan is the cheapest loan today in the market.
We'll speak in Hindi for this.
Yeah, home loan जो है सो सबसे सस्ता लोन होता है. आप कोई भी दूसरा लोन लीजिएगा तो वो उससे ज्यादा महंगा होता है. और एक तो इसका पीरियड भी लंबा होता है, 20 साल के पीरियड तक का आप ले सकते हैं आप होम लोन. तो अगर आप होम लोन को लेके मान लीजिए आप किसी और चीज से पैसा उठा के और आप होम लोन पे करना चाहते हैं तो वो रेट आपको ज्यादा पड़ेगा. आप ज्यादा रेट पे पैसा लेके और आप होम लोन को प्रीपे करेंगे तो उसमें आपको बहुत ज्यादा फायदा नहीं होगा. अगर आप इसको वाकई प्रीपे करना चाहते हैं तो उसका एक तरीका है कि जैसे आपका मान लीजिए कि EMI 15,000 रुपया है या 20,000 या 25,000 रुपया है, आप हर एक महीने में 2,000 रुपया या 3,000 रुपया आप ज्यादा पे करना शुरू कर दीजिए. तो अगर आप 2-3 हजार रुपया ज्यादा जो भी एक्स्ट्रा अमाउंट आप पे करेंगे वो आपके प्रिंसिपल से डिडक्ट होता रहेगा. और इससे क्या होगा कि आपका जो टोटल रिपेमेंट पीरियड है वो कम हो जाएगा और आपकी यू विल बी बेनिफिटेड. आपको उससे ज्यादा फायदा होगा बनिस्बत इसके कि आप, और नहीं तो आप एसेट बेच दें कोई दूसरा. अगर आपने शेयर में इन्वेस्ट कर रखा है शेयर बेच दीजिए, या अगर आपने गोल्ड में इन्वेस्ट कर रखा है तो गोल्ड बेच दीजिए और उसको बेच करके आप चुकता कर सकते हैं होम लोन को. लेकिन सवाल ये है कि नॉर्मली ऐसा देखा गया है कि I mean this is my personal opinion, I don't want to tell you कि you should also do that or not, that home loan rate is the lowest rate. Now अगर आप शेयर मार्केट में भी इन्वेस्ट करते हैं तो नॉर्मली इंडियन शेयर मार्केट का भी रिटर्न होम लोन से ज्यादा होता है. तो इसलिए मैं तो बेच होम लोन को प्रीपे करके
और होम लोन से इनको इंटरेस्ट में भी फायदा होता है और आपको टैक्स बेनिफिट्स मिलते हैं.
टैक्स बेनिफिट मिलता है. जो आपने 1.5 लाख रुपए तक का जो आप इंटरेस्ट पे करते हैं 2 लाख रुपए तक का, वो आपके इनकम से डिडक्ट हो जाएगा और उस पर आपको टैक्स नहीं लगेगा. अगर आप सपोज करें कि 20% के टैक्स ब्रैकेट में और 2 लाख रुपए आपका जो होम इंटरेस्ट दिया है साल में, तो 40,000 रुपया आपका टैक्स में बचत है सीधा सीधा. और अगर 30% के ब्रैकेट में है तो 60,000 रुपया आपका सीधा सीधा बचत हो जाता है. तो ये होम लोन इज नॉट अ बैड थिंग टुडे. द गवर्नमेंट इज आल्सो ट्राइंग to push this entire thing so that economic activity picks up.
Vivek Singh of Navi Mumbai says he's a salaried person, borrowed a 30 lakh home loan. Does change in repo rate immediately impact your EMIs, or you have to wait for 6 to 12 months? We just told you, Vivek Singh, that sometimes it is the tenure of your loan. बैंक आपका EMI कम नहीं करता है, मगर जितना फायदा होता है आपके लास्ट 2 इंस्टॉलमेंट्स कम हो जाएंगे. तो अगर आपको 36 महीने और देने थे, आपका 34 months हो जाएगा,
34 या 33 months हो जाएंगे. और जहाँ तक बैंक का रेट, नया रेट डिक्लेयर करने का टाइम पीरियड है, वो 1 वीक से लेकर 2-3 वीक में कर देता है बैंक. और अब इसके बाद आपको उसका बेनिफिट कितना जल्दी मिलेगा, तो इसके लिए आप बैंक से कंसल्ट करें. जैसे वो आपका बैंक अनाउंस करेगा, आप अखबार में देखें, और इसके बाद आप बैंक से कंसल्ट करें कि साहब ये जो बेनिफिट है आप मुझे पास करें. बैंक नॉर्मली पास करता है उनको बेनिफिट आपको.
Many of you have been logging in and saying hello. Please don't feel intimidated. अगर आपके पास कोई सवाल है, आप अभी पूछें. हम होम लोन पे सारे सवाल आंसर कर रहे हैं. There is Karuna Sharma of Noida who says, what exactly is a reset date factor and how does it coordinate with repo rate and its implementation on EMIs?
रेपो रेट से उसका कुछ इंटरेस्ट मतलब नहीं है. रेपो रेट बैंक को मदद करता है इंटरेस्ट रेट कम करने में और बढ़ाने में. अगर रेपो रेट बढ़ गया तो बैंक इंटरेस्ट रेट बढ़ा देता है, रेपो रेट घट गया तो बैंक इंटरेस्ट रेट कम कर देता है. और अगर बैंक ने इंटरेस्ट रेट कम किया है तो आपका जो बैंक होम लोन रेट है वो भी कम होगा, और अगर होम लोन रेट कम होगा तो आपका EMI भी कम होगा. तो रेपो रेट को बैंक से रिलेशन है, वो आप वहां पर छोड़ दीजिए. इसके बाद आप ये गौर करिए कि बैंक ने रेट कम किया. कई बार रेपो रेट कम करने के बावजूद बैंक रेट नहीं कम करते हैं. जो कि मैंने बताया आपको कि अगर बैंक के पास पैसे नहीं है तो रेपो रेट कम भी हो जाए तो भी बैंक रेट नहीं कम करता है. तो ये कंडीशन भी होना चाहिए कि रेट कम हो जाए, और रेट अगर कम होता है तो आपके जो बैंक होम लोन रेट है वो भी कम होगा, और अगर होम लोन रेट कम हुआ तो आपका EMI कम होगा.
और होम लोन अभी चूंकि 2 महीने में 2 बार रेपो रेट कम हो गया, क्लियरली RBI बैंक्स को एक इंडिकेशन दे रहा है,
स्ट्रॉन्ग इंडिकेशन,
वेरी स्ट्रॉन्ग इंडिकेशन दे रहा है कि आप रेट कम करें, इंटरेस्ट रेट्स कम करें ताकि ज्यादा ऑफ टेक हो. There is Deepa Singh of Mumbai who says, if credit is bigger than the deposit, then from where is this money coming for lending more than deposit? Are banks borrowing more than their capacity?
No, it's not that. I told you, जैसे 100 रुपया आपने डिपॉजिट दिया बैंक्स को, तो बैंक उसमें से करीब 25 रुपया गवर्नमेंट को जमा करता है, और फिर 75 रुपया से बाकी लेंडिंग एक्टिविटी करता है.
और वो गवर्नमेंट सिक्योरिटीज, गवर्नमेंट बैक सिक्योरिटीज
में इन्वेस्ट करता है. लेकिन कई बार जब लोन की ज्यादा डिमांड नहीं होता तो बैंक 25 ही नहीं 30, 35, 40 रुपया तक गवर्नमेंट सिक्योरिटीज में ही डाल देते हैं. अब जब वो जो उनके पास गवर्नमेंट सिक्योरिटी जो ज्यादा जमा हो गया है, तो आज के जैसे सिचुएशन में जबकि डिपॉजिट ज्यादा नहीं बढ़ रहे हैं लेकिन क्रेडिट का डिमांड बहुत है, तो ये वो सिक्योरिटीज मार्केट में बेच देते हैं, और जो उससे पैसा आता है उससे ये फ्रेश जो और एक्स्ट्रा एडिशनल जो डिमांड आ रहा है क्रेडिट को, उसको मीट करते हैं.
बैदुर जो बोस कोलकाता से ये पूछते हैं, should one borrow from housing finance companies or banks? Also, if I have to choose a private bank versus a government bank, how will it impact my EMIs?
जो कम रेट दे रहा है आप उससे लीजिए. आप ये मत देखिए कि कौन दे रहा है, हाउसिंग फाइनेंस कंपनी दे रहा है या बैंक दे रहा है. नॉर्मली हाउसिंग फाइनेंस कंपनी का रेट ज्यादा होता है एक्सेप्ट HDFC का रेट बैंक के बराबर का ही रेट होता है. और आप किसी से भी लेंगे, आप इसके बाद देखिए कि इंटरेस्ट रेट कौन कम कर रहा है, कौन बैंक कोई भी हो, उससे आपको कुछ नहीं फर्क पड़ता है. और आप याद रखें कि बैंक के फेल भी हो जाने से आपका होम लोन नहीं खत्म होगा, कोई दूसरा जो उस बैंक को टेक ओवर करेगा वो आपसे होम लोन ले लेगा. तो इसलिए इसमें आप मत जाए कि कौन, आप ये देखें कि कौन आपको कम रेट दे रहा है, आप उससे लोन लीजिए.
Neelu Reddy of Hyderabad is a very interesting question. The home loan interest rate at various lenders varies from 9.4% to 16%, while the same goes down slightly in case that the borrower is a woman. How can one choose a lower interest home loan? You'll have to do a market study. Actually, Neelu, the thing is that every bank gives you different rates of interest. The bank can set different rates of interest. There is no one rate of interest that the RBI sets. So what you do is figure out which banks give you the loans, and check out which are the what are the lending rates that they announce for home loans. Once you make your own chart after your research, then you go to the banks and figure out. Sometimes what happens is that some banks, the due diligence process is so long कि आपका घर निकल जाएगा आपके हाथ से. So you go to the lender who gives you fastest. Otherwise, there are some lenders who say who give it to you easier, and you would rather go for them. The choice is entirely yours. You can take from NBFCs, you can take from housing finance companies, you can take from scheduled banks, and all of these announce their rates of interest.
जब तक 16% का रेट की जो बात कर रहे हैं, ये रेट बेसिकली जो बोरोवर्स जो की नौकरी में नहीं है, सैलरीड नहीं है, और वो अपने बिजनेस करते हैं, और बिजनेस में भी वैसा बिजनेस करते हैं जहाँ पर कोई रिटर्न नहीं फाइल करते, कोई छोटा सा दुकान चला रहे हैं, लेकिन उनकी इनकम है. अब ये अगर कोई हाउसिंग फाइनेंस कंपनी, उनको नॉर्मली बैंक लोन नहीं देते ऐसे केस में, लेकिन अगर कोई हाउसिंग फाइनेंस कंपनी ये देख रहा है कि इस आदमी की इनकम है और हम इनको लोन दे देंगे और ये लोन वापस कर देगा, ऐसे सूरत में वो लोन तो दे देता है, लेकिन उसके लिए इंटरेस्ट रेट ज्यादा चार्ज करता है. उसका इंटरेस्ट रेट 14% से लेकर 16% तक होता है. दूसरा, उसमें एक और प्रॉब्लम होती है कि जो घर वो खरीद रहे होते हैं, वो घर ऑथराइज्ड कॉलेज में नहीं होती है, वो अनऑथराइज्ड कॉलोनी में होती है, जो कि रेगुलराइज कर दिया जाता है बाद में. ऐसा कॉलोनी जो कि रेगुलराइज बाद में हुआ हो, वैसे कॉलोनी में अगर कोई आदमी घर खरीद रहा हो, तो उसका फिर उस पे जो होम लोन होगा उसका रेट ज्यादा,
क्योंकि उस पे रिस्क एसोसिएटेड. Fazil Khan of Chennai says, my loan is 20 lakh and today I'm paying 9.45% interest rate. Let's say tomorrow this comes down to 9.3%. Then how much will it lower the total interest of my loan?
0.15 percentage point lowering of the rates will not affect much. It will affect you per lakh something around 10 rupees or 5 rupees per lakh. So 200 रुपया 300 रुपया के आसपास कम हो जाएगा, not more than that.
But remember, it's over a period of time.
Exactly.
And you're paying over a period of time. Every month there will be a small amount of.
And not only
reduction.
this. Now today it is 0.15 percentage point. Now tomorrow again it will come down by 0.25, then 0.35. So over a period of time you will find that the loan has been come down by say 1 percentage point. Then your EMI will be lowered quite substantially. So it goes by that. So any lowering of the rate will lead to lowering of your EMI, and any lowering of EMI on a longer period of time, as Jayashree is telling you, will be huge benefit to you.
Don't count how much it benefits you in 1 month or 1 year.
Yeah.
Remember, you're paying for the next 10, 15 or 20 years. And therefore, the consolidated, it's a big benefit to you. There is Ashish Jha of Hyderabad who says, my question, is there any government regulation which decides real estate price? I'm asking because I'm looking for a 2 BHK in Hyderabad. The flat which I was looking 2 months back, builder has increased price of rupees 300 to 400 per square foot. Then what is the point of reducing GST to 5%? In the end, there is no benefit for customer. You're confusing too many things, my friend. Ashish, you have to understand that there are many factors. Real estate is a complex investment that you're getting into. When you buy a piece of real estate, there is a tax, a central tax, that is a central and state tax, which is GST. And that used to be 12% and 8%. That has come down to 5% and 1%. Does that mean that directly your prices have come down? No, it doesn't. Because there was an input tax credit that used to come with the 12% and 8%. Today, without input tax credit, 5% and 1% can actually, in certain categories of housing, push up your prices. But because you're talking about a 20 to 30 lakh ticket size, maybe your price is actually coming down.
No, that point they are taking the CC, completion certificate.
Yeah.
Now, the moment they get the completion certificate, then input tax credit is not available to them. So they will increase the price a bit. So there are various kind of circumstances that is there, but it is the market driven. Now, look,
and prices are not controlled.
It's market driven. Now, if that developer has increased the price, will you be able to find another developer who is giving you at the old price? If you, then better buy it. Or otherwise, market driven. Why that developer will not charge you higher rate? Because if suppose today market goes down, he will be forced to sell at a lower price.
You know that developers were also selling at lower rates. At that time, many people bought it. If you haven't bought it, and today the prices are going up, especially in a market like Hyderabad, where the drivers are very, very significant, it is a market linked pricing strategy. So you will have to take the benefit at the right time. Like Prabhakar said, if one developer has raised the prices, check again. You'll find somebody else holding his prices. There's Mukesh Kumar of Delhi who says, what are the risks associated with floating rates?
Now, risks associated that if the rate goes up, you'll have to keep a close watch, and you should keep a close watch if you are borrowing at the floating rate. Now, the moment you find that inflation is going up, and if inflation is, suppose you are taking loan at this point, at say 10% interest rate or 9% interest rate, and tomorrow if you find that inflation is going up, that is an indicator that interest rate going to firm up. So then either you go for the floating rate, you just ask them to change to the floating rate, fixed rate, or otherwise you will be prepared to pay the higher rate of the interest. So it's market driven in that case. But normally in Indian market rate for last 10 years or 15 years, in fact, since the floating rate is introduced in 2004, I haven't seen that interest rate going up beyond 10.5%. For a small period of time, it had gone up to 11%, 12%. But then again, it came back to again 10.5%, 9.5%.
If it is not an equitable rate of interest, consumers stop taking, because then it becomes unviable for the consumer. If that happens, already a struggling real estate market will tank further. And therefore, neither the government nor the industry wants that to happen. And everybody will play within certain boundaries that they have drawn for themselves, which keeps it affordable for the consumer. There is Karna Sharma of Chandigarh who says, why do buyers need to go to banks for lowering rates? We have to stand in queues and the banks say that nothing will change. Can repo rate really lower your EMI, or is it a facade?
Repo rate has no connection with the EMI.
It does. Actually, Prabhakar, it does. We're telling them that it does. No, so let's explain. But as a consumer, because a repo rate came down, don't stand in queues to ask your bank to lower the rates. On the basis of repo rate, the bank will lower its interest rate. Once the interest rate is lowered, then please go to your bank and say, the interest rates have come down, please lower my interest rates to immediately.
Wait for that. Wait that when the bank announces the lowering of the rate, it's likely that in the next 5 to 10 days time, the banks will lower the rate. Then after you go, now if you go tomorrow to bank that, sir, lower my rate because the repo rate has gone down, bank will say that, no, we haven't decided as yet that what the new rate will be. And unless the new rate has been decided and announced by the bank, that stuff will not entertain you. It's as simple as